Hello, welcome to my today. This is King Studio. First time of joining us. Thank you for joining us and clicking to watch this. And if you're a returning subscriber, thank you for your support so far. Ensure you like, comment, and if you have not subscribed, please do ensure you subscribe to this video. Now, we want to continue our series we started a long time ago in non-profit making organizations. Okay, we have seen diverse videos of solved diverse questions relating to non-profit making organization. Okay, if you have not watched that, don't worry. I will drop it in my description. Check that, or I will drop it up here. Different series and questions we have solved, which is very important. The introduction part, and I remember I told you guys that there have different ways in which questions relating to non-profit are being set. I said the first one, you'll be given a question wholly where you'll be asked to prepare both the receipt and payment account, prepare the income and expenditure, and the balance sheet. That's the first stage. Another one, you might be given a question whereby the receipt and payment is already prepared. You'll be asked to prepare the statement of affairs, the income and expenditure, and the balance sheet. We have done that one. And also the last part, which is when it involves trading activities. Okay, because non-profit making organizations are not known for what making profit. But when they involve trading activities, that is what we want to see now. So I would advise you watch those other videos so that you can follow us and see what we are looking at, okay? So that you can understand effectively. So check in my description or up here so that you can follow up. So we want to see a question relating to trading activity. Now most time, even if the non-profit making organization, they are not meant to make profit. Most times, due to the fact that most of the funds they collect, they might want to involve in trading activity to help their members, so that the profit gotten from there can be shared among themselves. Okay, so once they get that fund to be involved in trading activities, we are to prepare their account as regards that. Okay, so the trading activity is still the same normal way we do for a profit venture, whereby we prepare their trading profit account. Okay, so we are going to see that now. We are going to see that using this question. Now the question said, the following is a summary of receipt and payments for the year ended 31st December 1996. Now we have the receipt and payment account. We have the balance brought forward, the subscription, the restaurant takings. We have the restaurant supplies, wages of barman, printing, general expenses, postages, traveling expenses. Now we have this other item at the beginning and also at the end. Okay, they said required, prepare, first one, the trading account for the restaurant. So we have to prepare the trading account for the restaurant, and also they said income and expenditure, and also the balance sheet. Now let's prepare this. Now I remember in the previous video, before we prepare anything, I said you have to adjust or make adjustment for what is required, so that once you start posting, it wouldn't give an issue. Okay, so we're going to look at what we have here and adjust. So the first item here, we have freehold premises here at 31st 1995, and at the end 31st 12 1996 it has reduced to 4.5. And what happened? This is an asset. If at the beginning it is 5,000, at the end it reduced to this, it means depreciation has taken place. So the first thing we do is adjustment. So if we adjust that, so we say depreciation for freehold premises. Okay, that is 5,000 minus 4.5 is 500 naira depreciation. Okay, so that is that. Furniture still remains the same. Stock, this is opening stock and closing. Now creditor for restaurant 450, 490. Now this is subscription in arrears. Now let's prepare subscription account. Subscription. So that we can know the one we post. Let's adjust it. Now subscription, if you check in the receipt and payment account, they receive this. Okay, so subscription is supposed, corresponding entry will come here as cash. We have 2,060 and another cash 100. Okay, So that is that. Now, if you come here in the additional information, we have subscription in arrears, 160 and 170. Now, I've treated how we can prepare subscription. Okay, I'll drop the link also, or you check in my playlist. You'll see there how you can prepare subscription, only subscription. Okay, how you can prepare it to get your actual value. So, we have here now subscription in arrears 160 and at the end 170. Now remember in adjustment I said anything arrears or accruals for that particular year you're doing. Remember we always prepare this at the end of the year. So at the end of the year for arrears we add, but for a year that is not at the end we do the reverse of what we are supposed to do. So if we are adding at this year for arrears, then for the beginning since it's arrears we are supposed to less. Okay, so we are supposed to less from what is already paid. So it means, and it is at the beginning. So balance brought forward will be here to less it from what you have here. So subscription arrears is 160. Okay, why this is supposed to be added with this. So at the end, it is a balance carried down. That is 170. Okay, so now, be that as it may, if you check, we are preparing this for 1996. Now, but if you check in the subscription, 1996 that was paid is this, and the other one is 1997. It means they made subscription in advance. That is prepaid income for the club. Okay, so 1997 was paid in advance of 100 naira. So what do? We're also going to less because for that particular year it was paid in 1996. That is prepaid income. So prepaid is supposed to be less. So we are going to less it. So it will also come here. So it becomes the balance carried down for this side as what? 100. Okay? So now the corresponding entries that will make it balance and what we are looking for is to know the value we will post to the income and expenditure account. So one will add up 2660 plus 100 plus 170. That will give us 2930. 2930 is 2930 minus 260. Okay, so what we go to the income and expenditure is 2670. That is the reason for preparing this. Okay, 2670 is what we go to the income and expenditure. Okay, so that's for subscription. Now the next one is postage. Postage. Now we have postage here that was paid. So the corresponding entry comes here as cash, 800. Okay. Now they say postage owing. Now for the current year we are to what? Add. Why for the first year, like what we did for subscription, we are to what? To less. Okay, but this now is an expenses, not an income, unlike this. So this is accrued expenses. So for the first year, we are to less. So we are lessing balance brought forward as what? 70. Then our balance carried down supposed to be added to the ready cash that was paid as 80. So the essence of this is where the income and expenditure, where it will be. So we have 880 minus 70. It will give us 810. So that's for postage. Now another one is the creditor, so that we can get our purchase. Remember, we want to prepare trading account, and purchases is important. So how do we prepare the purchases? We use creditor figure since purchases is not given. So to know how to do this, watch my control account. Check in the description also. We'll have control accounts there. Okay, ensure you watch that. Okay, so we have creditor for restaurant, creditor. So we'll do that with control account. That is the creditor's control account. Okay, creditor's control account, so that we can get our purchases. Now, restaurant supplies, it means it is the creditor that supplies, also known as supplier. Okay, so since it's at the credit side of the receipt and payment, it means they made payments to them. So they are receiving it as cash. 6,000. Okay? Now, creditor for restaurant, this is the beginning and this is the closing balance. Now, we say all creditors have a credit balance. So, at the beginning, they have a credit balance. So, it will be balance brought forward at the credit side. At the beginning, that's 450. Okay? While we have balance carried down for this, 490. Okay? So that our balancing figure becomes purchases. So this is 6,490 minus 450 will give us 6,040. 6,040. Okay, so this is giving us 6,490. So that's how to prepare. So these are purchases. Okay, so we have done all the adjustments needed. Now let's prepare the trading account. So prepare a trading account for the year ended 31st December 1996. Okay? So the first one is our opening stock. We have opening stock here. The same way we prepare our trading profit loss account. Opening stock of refreshment 618. 618. That is said add purchases. Look at the purchases here, 6,040. So this is 8, 5, 6, 6. Now there's no carriage inward. There is no return outwards. So we'll just less closing stock immediately. Less closing stock. So the closing stock here is 548. 548. So we have 0116. Okay? So that is what we have. So our sales here will be our sales. Now if you check, the sales supposed to be what they receive. So restaurant takings, what they receive from the restaurant. Okay? So becomes our sales. So write it here. Restaurant takings is our sales as 8,000. So sales minus, remember this becomes cost of goods sold. So sales minus cost of goods sold will give us a gross profit. So the gross profit will be here, carried down. So 8,000 minus 6,110. If I do that with my calculator, I'll be having 1,890. So that I can have 8,000. Okay, so can I have gross profit brought down is 1,890. So I want to get the net profit for this so that it can be transported or moved to the income and expenditure account. So we have, if you watch here, we have wages of barman. Okay, this is the expenses of the man that serves in the restaurant. So it should be paid here. Wages of barman, which is 1,120. So that's the only expenses for the restaurant. So this minus this is supposed to give us the net profit. Okay? So this is 1,890 minus 1,120. With my calculator, it will give us 1,770. So that this becomes 1,890. Okay? So our net profit here is 770. So that's a trading account. Okay? The same way we prepare our trading profit loss account for a profit venture. Okay? So that is 770. So the next one is to prepare the income and expenditure account. Okay? Remember this for subscription. Remember this. Okay? Because we are going to clean it now and prepare that. Okay, so if we do this now, our income and expenditure. So income and expenditure for the year ended 31st December 1996. Okay, so all our income is at this side and all our expenditure is at this side. So all expenditure, now let's start from printing. Was there any adjustment? No. So write printing 140. Okay. So the next one, general expenses. Any adjustment? No. That's 1050. The next one, postage. Any adjustment? Yes, we did adjustment. I asked you to take it down. So let me check the postage adjustment. So our balance there is supposed to be 810, and the other expenses there, traveling expenses is 1030. Okay, and we'll check. We have depreciation. Remember that for our freehold premises. Okay, depreciation of 500. Okay, so the next one is the income. So remember this profit. So we'll bring it here. So it will be profit from trading activities. From trading activities. That is 770. Okay. Now another income that can come here is a subscription. Or we've done adjustment. Remember the adjustment we did. Okay. So the subscription, the adjustment we did, the subscription is 2,670. 2,670. Okay. So if you add up this, you will see that the expenditure is greater than the income. So for that, it means there is what? Deficit. Okay. So if you add up the income, we'll have 3,530. So if we add up this, not up to, so the deficit is what? 90, which is giving us 3,530. Okay? So that is the income and expenditure. So the last part is the balance sheet. Right. The balance sheet as at 31st December 1996. So we'll have our fixed asset, we have cost, we have depreciation, we have net book value. So the cost for here, freehold, the cost is 5,000 and depreciation is 500 and net book value is what? 45. Remember that? The next one is furniture. The next one is what? Furniture. So we'll have furniture of 3,620, no depreciation, so the net book value still remains the same. Okay, so that's all for that. So we have 8,620 minus 500. It will give us, this is 0, 2, this is 1, 8. Okay, so now we have our current asset. So the current asset, we'll have cash. This is cash in hand here. We'll have cash in hand as 980. Okay, so we'll have stock of refreshment at the end as 3,620. And we'll have accrued income, accrued subscription as 170. And I think that's all. That's all for that. So the next one is to post our accumulated fund. Accumulated fund. Now, what will be our accumulated fund, ladies and gentlemen? Now we are supposed to prepare the statement. Fund is to prepare statement of affairs. Statement of affairs using items at the beginning only. Using items at the beginning only. So we'll have statement of affairs. The first one, we'll use only items at this point. So the assets will be freehold, 5,000, furniture, 3,620, stock, 618. Now we have liabilities here. Liabilities is creditor. Creditor is 450. Then this is accrued income, subscription in arrears as 160. And this is accrued expenses, that is postage, owing as 70. Okay? Now, the last part is the cash, the one at the beginning. That's all come here. So we'll have balance brought forward. So we'll have cash as 360. So if we add up this and subtract this from it, it will give us our accumulated fund. Okay? So using my calculator, if I would add up, I will have 9758, deducting this from that, 9758 minus 450 minus 70 is 9238. So that is my accumulated fund, 9238. So I have it here, 9238. So I'll say less deficit. The deficit that we got, which is 90. Okay? Deficit, which is what? 90. Had it been it was surplus, would have added it, so it is deficit, we are lessened. So 9238 minus 90 equals 9148. So we have our current liabilities. So one of the current liabilities that we have here is our creditor, 490. Another one is postage. Postage owing, that's 80. Then, remember this 100 we said it was prepaid income that was paid in advance. So we said subscription, prepaid, 100. Okay? So if we add up So we have 980 plus 3620 plus 170. It's giving us 4,770. 4,770 plus 8120. That's 12,890. So if we add up this also, we'll have 9148 plus 490 plus 180. So we have 9818. Okay? 9818. Sorry, the stock is supposed to be 548. Stock is supposed to be 548. Okay? Stock is supposed to be 548. We added as 3620. So we have 980 plus 548 plus 170. So we have 1698 plus 8120. 1698 plus 8120 give us 9818. So if we add 9148 plus 490 plus 180 is 9818. So it balanced automatically. Okay? So it balanced automatically. So that's how to prepare our trading activity when it involves our non-profit making when it involves the trading activity. Okay? So ensure you like, comment, subscribe to this channel and share this video. Okay? Thank you very much.